Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Kishore Muktinutalapati, an equity strategist for ADCB. With an objective to empower you with investment insights, on this program we discuss various perspectives shaping the global investment landscape. This is the second in the series of the podcast where we discuss our 2022 investment strategy outlook. In this episode, we talk about the asset allocation framework given the opportunities and risks presented by the macro picture which we laid out in our podcast last week. Before we dive into this week's content, we wanted to take this opportunity to wish you and yours a year full of joy and continued success in the year ahead. A very happy, healthy, and prosperous new year 2022. On last week's podcast, we set out our macro outlook for the year ahead. In a nutshell, the key macro influence on financial markets will be the interplay between the evolution of the growth inflation mix and the corresponding policy response. Against this backdrop, we laid out a base case scenario and a downside risk scenario. In our base case, we assume a faster moving global economy transitioning into a mid-cycle environment asynchronously across constituents. Inflation is likely to start moderating in Q1 and the central bank policy will be appropriate for the growth inflation mix. In our downside risk scenario, however, which still has lower probability in our assessment, we see an unfavorable growth inflation mix and an inappropriate central bank policy. Our base case scenario implies a rather stable outlook for financial markets in absence of any major external shock. However, mid-cycle transitions are usually associated with higher uncertainty and financial market volatility. But as the cycle matures into a new normal, uncertainty should start to diminish and provide a reasonably clear path for financial markets. Our downside risk scenario could mean headwinds for most financial market assets. Should the central bank policy turn inappropriate to the growth inflation mix, it's likely to increase the risk premium. Any tangible rise in real rates from the current extremely negative levels is also a risk here. Should that be accompanied by a fall in break-even rates, most assets are likely to struggle. Bringing these two scenarios together and considering some macro risks we laid out in our previous episode, we think a few points are worth bearing in mind through the course of this year. Investors should upfront expect lower returns during 2022. This doesn't mean negative returns or losses, but returns lower compared to the extraordinary returns of the previous 2 years. Financial market volatility is likely to be higher over the next year as the pandemic-era policy accommodation is withdrawn. In the downside risk scenario, most financial markets could see sizable drawdowns, but any such dip is likely to be viable. Further, asynchronous transition into the mid-cycle phase creates opportunities and risks across countries. Across major markets, expect a leadership rotation within the drivers of financial conditions, and this will likely differentiate winners from losers. As investors, continuing to have a disciplined participation in these financial markets is important as the chances of a recession in the next 12 months are relatively low. Perhaps adding some downside protection to the portfolios is prudent. This can be done in many different ways, including thinking long-term and thematically, simply diversifying across assets and geographies, adding negatively correlated assets like volatility and gold, preferring quality across segments and assets, holding some tactical cash, and for advanced investors, using stop losses and derivatives. In terms of our asset allocation, we stay neutral equities and alternatives, underweight fixed income, and hold a tactical overweight in cash and liquid assets. Here, our conviction is that returns on fixed income are likely to be negative and therefore we hold more cash tactically. However, we would remain watchful of any opportunities to deploy this cash. Thank you for listening to this podcast. We hope you found it useful. In case you would like to get more information, please reach out to your contact at ADCB. You can also log on to our website at www.adcbam.com. Do watch this space for more episodes of this podcast discussing our 2022 outlook for various asset classes. It is our endeavor to provide you with timely investment insights, and we hope we can stay engaged as we navigate through this year 2022. You were listening to the Global Investment Insights podcast, and my name is Kishore Muktinutalapati.